Finish writing. Do you have calculators? No. Then how you did your business level and corporate level? Not now. You have no? Ah, right. Bring that next day, next week. So when you are coming to the finance lectures, bring the calculators always, right? Because we have to do more calculations. So finish. Second one. No, you are not well today. You are not well today. Oh, okay. Shall we discuss the answers? So now you know the definitions now. No need to explain that again, right? So you can explain the term finance and financial management. What's the answer for finance?
We have to allocate the funds to criteria for goals.
No, you need to explain how you are going to raise funds. How you are going to raise the funds. Yes, about how you are going to raise the funds, how you are going to use that funds, and or how you are going to invest those funds. Those terms should be there. Otherwise, you won't get marks. Clear? I know you have the idea, but you need to write exact same idea. Okay? Then what is financial management?
We have to enhance controlling the managerial activity, the planning and controlling the finance.
Financial resources.
That one, how to plan into control by trading.
That's also that planning and controlling should be there, right? Planning and controlling what?
Finance data.
Financial resources. So though if you want to score, you should have written this thing. What is a managerial activity involved with planning and controlling? So managerial activity should be there, planning and controlling should be there of the firm's financial resources. Those three terms should be there. Clear? Funds also okay, but firm's financial resources is more accurate thing. But clear? So when you are writing the answers, make sure you have written the terms. There are some specific terms in a definition. No? Those terms should be there. Right. Otherwise, it will lost its definition. What is the second one? Ti- Discuss, what's the question? Discuss the three types of finance decisions. What is okay in finance decision? If you have only written those three, you will get only 1 marks if it is a 3 mark question. Discuss in the sense you need to explain the term as well. Did you explain? Yeah, then okay. Right? Make sure if you those are the terms you should be aware. Discuss, explain. If you just ask to how list down the finance decisions, then you can 1, 2, 3. That's enough. But if they ask to discuss, then you should explain. Clear? Then what is the third? What's the answer?
There are two capital management. There is long term and short term use. Which is
No.
more benefit. Which is benefit.
Yes. When you're writing the answer, what's your answer? You have right. Right.
Reallocating the fund amount when there is a fail on the investment of the second, won't see the risk and uncertainty of the investment. The risk should be better than the returns on.
Yes. Can you remember this thing? We have discussed how many aspects? 2 aspects. One is you should select the asset. If that asset fails, you should reallocate. Very good. Reallocate your fund or cash or the capital. And also you need to analyze what benefits and the return of that asset. That is the one aspect. The second one, you should analyze the risk and the uncertainty of that investment. Right? So make sure you should write these things. Clear? What is the fourth one? Only three? Then okay. Right, we have discussed these things. In which types of business owners make financial decisions? Sole proprietorship and
Partnership.
partnership. In which type of business professional managers make decisions? Companies, right? Mainly companies. Shareholders are not involved with these decision making and all. It's the role of manager, finance manager. Right? Okay. Next, possible goals of financial management. What are the goals? Survive. It's about survival. That's why we are maintaining our working capital as well as goodwill. Very good. You should have the goodwill as well. Good. Very good. So it means you have to operate your business for a foreseeable future. What is the term? What is the single term we use? Foreseeable future? Going concern. That's big, right? Survive. And beat the competition, right? And maximize the sales, right? If you have sufficient fund, then only you can invest on inventories. If you have the inventories, then only you can make the sales, right? Next, maximize the net profit. That's the overall goal, right? Then maximize the market share. Market share means, yes, investments, and minimize your costs and wastages as well. That's why we are selecting the optimum thing, not the maximum or the minimum. We select which kind of options? Optimum. If it is a capital structure, we need to select the optimum capital structure, right? If you are going to invest in an inventory, you should determine the optimum inventory level. Then only you can minimize the cost. Then maximize the value of shares. How you can maximize the value of shares? What is the idea behind this? Maximize the value of shares mean you are increasing the price of shares. Clear? Let's say you purchase the share, you are an investor or you are a shareholder. You purchase the share of a company, right? At the time of you acquire the share or purchase the share, one share is, let's assume, 100 rupees. 100 rupees. Each share you purchased for 100 rupees, right? But today, let's say you have purchased 1 year before. But today, this exact share, right, value is 150. Now what has happened? You have the capital gain, which means you purchased for 100. Now its value is 150. Still you are the shareholders of those companies, which means your share value has increased. Yes, very good. It has increased. Clear? So these are the goals of financial management. Repeat those things. Survive, beat the competition, maximize sales, maximize net income, maximize the market share, minimize the cost, as well as maximize the value of share. Clear? Right. This is kind of chart. It will be helpful for you to memorize the things, I think. You know, finance management concerned with three decisions. Those are there. And you need to analyze. At the time of analyzing, you need to analyze what? Risk and the return of those investments. What is our overall goal to achieve? Overall goal is profit maximization and wealth maximization. Right? Okay. Let's start with the maximization of shareholder wealth. You know now there are two types of goals, no? Main fundamental goals. Profit maximization and wealth maximization. So now we are going to discuss this thing. Maximization of shareholder wealth. I think now you know the meaning of this. What is that? Maximizing the shareholder wealth means capital gain, which means you need to increase the share price or else share value. That's a simple idea. The term wealth means shareholders' wealth or the wealth of persons, those who are involved in the business, right? Wealth maximization is known as value maximization also. These both are same thing. Wealth maximization and value maximization. If you in the examination, if you are asked to explain value maximization, what is the meaning? You need to explain the wealth maximization concept, right? So, you know, the comprehensive goal of the firm, of any company or any business is to maximize the shareholders' wealth. That's why they invest in the company now to get the wealth maximization. So this occurs when you maximize what? Share price for current shareholders. Now you can link this thing with that example that we have discussed earlier. You both invested in a company now for how much? 100. So today, after 1 year, also you are the current shareholder. You purchased for 100, but now it has increased for 150. Share price has maximized, right? This is the way how you say your value has increased or wealth has maximized. Clear? Right. Next, profit maximization. Then what is the meaning of profit maximization? Do you know? Main aim of any business, right? Any economic activity is to earn what? Profit. That's why we run a sole proprietorship. That's the reason why we run a partnership, or else that's the reason why we have a company to earn profit, right? A business concern is also functioning mainly for the purpose of earning profit. That's the reason why business is functioning. And profit is measuring technique to understand the business efficiency of the concern. What is the meaning of business efficiency? Business efficiency? Yeah.
Input divided by
Simply, you need to minimize the cost as possible as you can, right? Okay, here is the difference between the profit maximization and wealth maximization. So profit maximization means you can overcome the future risks and also the uncertainties. Wealth maximization means your shareholders' wealth is maximized, right? Profit maximization, mainly we calculate what? Efficiency and the economic prosperity Here we evaluate the current wealth of shareholders under wealth maximization. It is measured in terms of efficiency. It is measured in terms of what? Market price of a share, right? It involves the problem of uncertainty because the profit is uncertain. You can't predict the future. No? It's uncertain, right? So wealth maximization involves problem related to maximizing shareholders' wealth, right? So these are the comparison between the profit maximization and wealth maximization. Just go through this thing. Okay, this is the end of our chapter 1. Is everything okay, clear? Do you have any doubts? No. Sure. Prosperity means, what how you are managing your business, right? All the trans. Yes. Okay. Right. That's it. Then now we can take a break. Then let's start at 10:15. Okay. I'll share these lecture materials through Google Classroom, right? Okay. This is your second chapter. It's about financial system and the financial markets, right? Okay. What is a financial market?
They are on bias and selection track.
Very good. It's a market, right? Where the securities are bought and sold and serves the purpose of allocating. Can you remember we discussed this thing? Scare funds, right? From savers to borrowers. Say, savers have excess money, excess fund. Borrowers, they need fund or money. So this marketplace, this financial market helps to interact those savers and borrowers, right? In buying and selling what? Securities, right? So securities means financial instruments, right? It can be equity share, preference shares, right? Or as what? Government bonds, corporate bonds and debentures, as well as share warrants, right? So simply, financial market is a marketplace where these securities bought and sold, right? And serves the purpose of allocating what? SCA funds from savers to borrowers. That's the financial market. Clear? Understand? The complex network of institutions and securities which facilitate the transfer of funds between savers and borrowers is known as financial system, right? Which means if you look at this flow, this is a financial system. You know, in this side, savers are there. Households, they also save, no? They have savings account, right? You all are maintaining a savings account, no? So you are the households. Next, businesses and firms, which means simply it can be a sole proprietorship, partnership, and company. And what other? Government. They also deposit funds in the bank. And foreigners. These are the lenders. Lenders means savers. Those who have what? Excess money, right? In this side, you have borrowers or else spenders. They need what? Fund, or they have the need for money. So this financial system, right, facilitate these needy people to interact with those who has the excess funds, right? Clear. So if these one of these want money, they can do two types of finance. One is direct finance. Direct finance means you are borrowing funds through financial markets. Clear. If you obtain the funds through financial market, it is called as direct finance. Is that clear? Same time, if you borrow funds through the financial intermediaries, right, it is called as indirect finance, right? Is that clear? We will discuss those things, financial market and intermediaries. For the time being, just keep in mind. So direct finance means you borrow funds through financial market, right? Yes, those are the financial markets. Indirect finance means you borrow funds through financial intermediaries, which means financial brokers are there. Intermediaries means someone is there in between you and financial markets. Clear? So you should keep these things in mind. So this is a kind of what? Financial system. So now you go to this definition. So if you are asked to define the term financial financial system, what you should write? It's a complex network of institutions and securities which facilitate the transfer of fund between whom? Saver and borrower. It facilitates the transfer of funds between saver and borrower is called as financial system. So what are the key terms you should include? It's a complex network, right? Of what? Institution and securities. And also which facilitate the transfer of funds between savers and borrowers. Clear? Right? So now you know what is financial market as well as now you know the financial system. So what is financial market then? What is financial market? Financial market is a marketplace where securities are bought and sold. Right? It helps to allocate funds between allocate scarce funds between savers and borrowers, or you can say lenders and spenders, right? So when it comes to the financial system, it's a complex network of institutions and securities, but it facilitate but transfer of funds. It facilitates you to transfer the funds between savers and borrowers. Clear? So these are the examples for these securities. What are they? Equity share, preference shares, and government bonds, corporate bonds, debentures, share warrants, right? Those are the financial securities. Clear? Right. So if you are asked to explain the financial system, just keep in mind, you just need to explain the term as well as, if possible, try to draw this thing. Right? Clear? So then you can score full marks for the question. Right? This explain the clear idea of the financial system. Right? Okay. Functions of financial market. What is the function of financial market? You can get directly from the definition.
Main function is to borrow.
Which very good. Which means it provide the channel, right, for funds to transfer from buyer to seller. Sorry, saver to borrower. Savers means are the people or the institutions who has excess funds. It is clear now? At the same time, borrowers are the people and institution having shortage of funds. They need funds. They are the needy people. So this financial market provide the venue for transferring funds from saver to borrowers. Clear? It can be happen two ways in a financial system. Now you know. What is the first one? Direct finance. The second one is indirect finance. What is the direct finance then?
Fine.
If you borrow funds through financial markets, it is called as direct finance. Then what is indirect finance? Borrowing funds through financial intermediaries, right? There are some registered financial intermediaries, right? One is Bank of Ceylon, Sampath Bank. Those are kind of brokers, right? Is that clear? Do you have any doubts? No. Structure of financial markets. Financial market can be classified into two major types. On the basis of maturity of the security traded. What is the meaning of maturity? Very good. Which means the time, very good, time period of the security, right? Let's say you are investing on a short-term investment, which is 3 months. Then what is the maturity period? 3 months. End of the 3 months, right? Likewise. So based on the maturity of the securities, we can classify the financial markets into two major types. One is what? Money market. Second one is capital market. I think you know these things. You have studied in your A levels as well, right? So money market means what is the meaning of money market? Very good. Is the sorry? Very good. Less than 12 months. Which means it's a marketplace where short-term securities are traded. We define the short term as less than 1 year, right? It includes treasury bills. Who issue these treasury bills? Government. If government have short-term fund needs, they issue treasury bills. What is the specialty of these treasury bills? Very good. For the treasury bills, you don't have interest. You only get the gain. Let's say its par value is 100. Government issue it for 90. Clear? And certificates of deposit, what is that? Certificate of deposit, CDS. Can you remember? Yes, which means if you, as an individual or a company, if you invest or if you deposit in a bank, they will provide you the certificate for the investment. With that, you can go for a loan as well, right? And commercial papers, who issue these commercial papers? You know, treasury bills issued by government. Very good. Commercial papers issued by businesses, right? Not the shares, right? Just agreement, kind of agreement, right? We can't go for the money market shares, right? So in the money market, both government and the business firms, right? They issue and borrow funds. Clear? So you know the idea of money market. What is the next one? Capital market. What is capital market then? Is the marketplace where long-term securities are traded. We define the long term as which has a maturity more than 1 year. Now you know the maturity term, right? More than 1 year. Like debt and equity instruments. Treasury bonds. Treasury bill is a short-term security of government. Same time, treasury bonds are the long-term securities of government, right? So, what is the difference between the treasury bonds and treasury bills? Can you remember? For the treasury bonds, you can earn interests as well as, yes, risk also there. And corporate long-term debts, it can be a long-term bank loan as well. Also, corporate bonds. Bond is also kind of a debt instrument used by hmm, okay. So what are the equity instrument we trade in capital market?
Share. Yeah.
Yes, ordinary shares, preference shares, those are the equity instrument. Then what are the debt instrument? No, sale of asset is not an comes under equity. right? Normally, these two only comes under equity, ordinary shares and preference shares. And under debt, you have the bonds, corporate bonds, as well as the treasury bonds, right? Debentures as well. Okay. So these are the difference between money market and capital market. Do you have doubts? No. And also another kind of types also there. What are they? Primary markets and secondary market. What is primary market? What is primary market? Yes, which means it is the place, it's the marketplace where new issues are traded. New issues are sold, not trading here. Here, new issues are sold by the government or corporation. Let's say you three, right, incorporated a company. Now you need to raise funds. You have registered in CSE as well. Now you need to issue shares first, right? You need to issue now initially. Those initial shares, initial new issues, be sold in which market? Primary market. Now you have issued in the primary market. Someone has purchased that shares. Now the shareholder can trade that shares in which market? Secondary market. That's the thing. So all the initial issues should be sold in primary market. And once you issued, those issued shares can be traded in secondary market. Clear? Right. Examples, government sells treasury bills via weekly auctions. Treasury bills through the auctions, they are selling. Right. Initial issue of equity, like we discussed now, it can be a share. To investors also take place in the primary market, and such issues are known as what? Initial public offerings. Those new shares you issue is called as initial public offerings. These initial public offerings happens in primary market. Clear? Funds flow from investors to company, right? Through this only you can get the fund. Next, secondary market, is the market where previously issued securities are traded, exchange among the investors, right? Shall we just increase the temperature? I think you are directly facing this. You just go there. Right. Okay. Right. So, secondary, what is secondary market then? Market which very good. Previously issued shares are traded. Right. Examples, here we have sold the government treasury bills through the auction. And trading the treasury bills after initial auction will take place in secondary market, right? Share trading at the Columbus Stock Exchange. You told, right? CSC is a secondary. So here funds flow from buyer to seller. Here investors to company, but here buyer to sell, right? So these are the markets. So what are the major types of financial market based on the maturity of the security. Very good. Based on the maturity, we classify as money market and capital market. What is money market? Is a marketplace where we trade short-term securities, which has a maturity period of less than 1 year. Then what is capital market?
Yes, paid Ganesh has a maturity of 1 year.
Very good. Long-term securities. Is the marketplace where we trade long-term securities, which has the maturity period of more than 1 year, right? So, what are the securities traded on the money market?
Treasury bills, commercial paper,
Commercial papers, treasury bills,
CD,
yes, certificate of deposit. Then what are the securities we trade on the capital market? Treasury bonds, debentures. Very good. Long-term bonds, shares also comes under capital market, which means equity and debt securities. Clear? And what are the other types of markets? Primary market and secondary market. What is primary market? Oh, yes. Primary market means is the place where new securities or the new issues are take place or sold. Then give me an example for primary market.
Newly registered company is issuing share for the
Very
first
good.
time.
If a newly registered or incorporated company issue the shares for the first time, it takes place through primary market. What is the name for that shares?
Initial IPOs.
IPOs. Initial public offerings. Clear? Then what is secondary market?
Exchange, the place where previously exchange securities
Buyers to seller. Clear? It's the place where previously issued securities are exchanged from buyer to seller. Clear? You have the idea, right? Okay. So these are the examples we discussed. Money market instrument, treasury bills, certificate of deposits, commercial papers. Capital market instrument, treasury bonds, corporate bonds, ordinary shares, preferential. Debentures also there, right? Clear? Okay. So let's see one by one in detail. Treasury bills, issued by government, right? It's a short-term instrument. They are three types. One is 3-month treasury bills are there, 6-month treasury bills are there, and 12-month treasury bills are there. Keep in mind, right? It is always issued at a price less than the par value, as we discussed earlier. If the par value is 100, they will issue for how much? 90 rupees, right? So this thing also we have discussed. Treasury bills do not pay interest, and the return to the investors is the difference between what? Selling price and the buying price. Selling price is 100, but the buying price is 90. So what is the return? 10 rupees. 10 rupees, right? Selling price is 100, buying price is 90, no? Then 10 rupee is the return from this treasury bill. Clear? Second thing, certificate of deposit. What's that? It's a debt instrument. Who are the seller of this certificate of deposit? Bank. Banks sell to whom? Depositors. Right. So this pays what? Annual interest at maturity. Pay back the original purchasing price as well. If you deposit on a fixed deposit, right, they will issue a certificate as well as they will give you the interest annually. At the maturity, you can get the principal as a repayment, right? Let's say you invest 1 million for a 7.5 percentage interest rate per annum, then yearly you will get 7.5 percentage interest. Let's say the maturity period is 3 years. So at the end of the 3 year, you will get the principal that you invested also. How much you invested? 1 million. That 1 million will be repaid by the bank with the interest. Clear? So those are the certificate of deposit. They are issued with different maturity periods. There is no any standard period for an example, for the fixed deposit, right? It can be 2 years, 3 years, 4 years, 5 years, likewise. Also, the interest rate also differ based on your deposits and amounts, right? But yes, these certificates, not fixed deposits, not only for the 1 year, right? You have 2, 3 years also you can deposit. Next, commercial papers. What is commercial papers? It is issued by the businesses or the companies, right, to obtain short-term funds. Keep in mind, typically, these are issued by well-established company. Why? Otherwise, no one will provide you the money. If you are not a well-established company, if you have a bad reputation, will the lenders provide you the money? No, they have the fear of risk, right? So it is issued by well-established company, right? They are typically issued as an interest-bearing instrument. Interest-bearing instrument mean you will get interest on those investments, right? So this issuance of commercial papers is facilitated by either an investment bank or commercial bank, which may act as a intermediary or guarantor. You can provide this through intermediaries like banks. Clear? So these are the three things. What are they? Treasury bills, Next, certificate of deposit, commercial papers. These are the short-term securities.
Certificate of deposit. Are they used?
Yes. If you need to consider the maturity period. If it is less than 1 year or 1 year, then you can consider it as a money market security. Then if it is more than 1 year, you should go for the capital market security. Clear? That's up to you. You need to make the decision. Next, capital market instruments. What are they? Treasury bonds, corporate bonds, shares, right? Who issue the treasury bond? Government, right? It issues with any maturity greater than 1 year. So treasury bonds normally has more than 1 year period maturity. That's right. So it can be 2, 3, or 4 year bond. In contract treasury bills, what is the specialty of treasury bonds? You earn interest on those bonds. For the treasury bills, do we have interest? For the treasury bills, do we have interest? No. For the treasury bonds, you can earn interest. Next, corporate bonds. are the long-term debt issued by companies, business or companies of various types. There are so many types of bonds. One is zero coupon, right? Zero rated bonds are there, rated bonds are there. Do you know those things? Zero rated means for the such kind of bonds, you won't get the interest. That's why we call it as zero rated bonds, right? Rated bond, yes, which means it will be appreciated for the zero rated, right? So in the market, let's say it's kind of treasury bill, like treasury bill. You purchase for 100. After 1 year, the price of that bond becomes 120. So for that bond, you earn only 20 as return for the zero rated bonds. Zero rated means you can't earn interest now. Then you can earn only this thing. Let's say this can be as negative as well. You purchase for 100, but in 1 year it decreased to 90. Now you have a loss. You should bear those things because investment always bear what? Risk, right? You can't assure the return. Uncertainty and risks are there, no? So it is about bonds, right? Some bonds do not pay interest, like I said. What is the name I told you? Zero rated bonds, right? While others are issued without promised interest, right? The rate of interest itself can be either fixed or variable. You can earn a fixed interest rate or else a variable interest rate. It depends. So that is about corporate bonds. So in next year, in next semester or next year, I think, I'm not sure, you will learn how to value these bonds as well, right? So if you want to value, you need the idea about these bonds, no? That's why we study here these things. Yeah, there is a interconnection, right? Next, common, ordinary, and preferred shares. Common shares are mostly long-term financing, right? It represents the ownership of the company and do not have a maturity. Finite maturity. It does not have finite maturity. What is that?
Until the company gets closes,
Until the company operates, that the maturity is there, right? There is no any maturity period for the ordinary shares. And also, it is not an obligation for the companies to pay the dividend as well, right? Let's say you invest in a company, they don't have the obligation to pay the dividend for the ordinary shares. The obligation comes for this thing only, preference shares. If you invest on the preference shares, it is an obligation to pay the dividend first for you. Clear? Right. There is no guaranteed payment or interest on common shares, as we discussed now, right? Companies may pay periodic dividends to shareholders. Preferred stock, on the other hand, carries a promised rate of dividend, as we discussed. For the common shares or the ordinary shares, you don't have the promised dividend payment. It is not even the obligation of the company to pay you the dividend. But for the preference shares, it's an obligation. It has the promised rate of dividend. Clear? So those things you should keep in mind. Right. Capital market in Sri Lanka. What is the most well-known capital market, Colombo Stock Exchange, right? So it's a stock exchange, provide a liquid and open market for trading shares, not only the shares, debentures of public listed companies as well, right? So if let's say if you want to issue the share, if you want to trade the share, or else if you want to provide or obtain a debenture, then where you should go? CSE for the companies. Clear? And also company is limited by guarantee and not for profit. Also there. Right. This is the historical development of what? CSE. It established because of the failure of coffee crops, right? In 1870, led the British planter community to attempt a tea plantation, creating the need to raise capital. They had a need to raise capital. For that, they have established what? They established Shah Brokers Association in 1896, right? In 1904, they renamed it as what? Colombo Brokers Association, right? 1948 is the year we got independence, right? So, so many changes happen, economically as well. Open economic also there, no? You can export, import, those things happen, right? 1960s, Bank of Ceylon, insurance industry and oil companies, they have established, right? 1971, acquisitions happen. Acquisition mean? Very good. One company is acquiring another company. Very good, right? Some quoted company is acquired by the government. Some companies acquired by whom? Government as well in 1971, right? Also 1972 is there, 1976 is there, right? So here 216 companies, but in the 1976, it is 76. It has reduced. Open economic policies, we observed, adopted. What is open economic policy? You can trade. You can trade globally. You don't have any restriction. That's why open economic policy means. Right. So 1892 Amendment of Company Act. What is the currently using Companies Act? Act number 7 of 2007. But it has subsequently amended in 2025. Keep in mind. There are some slight changes for that previous act, number 7 of 2007, right? So that's it. And 1984, share market open to public. So when we have opened open to the public, 1982. 1984 is there, 1985. Officially we have formed what? Colombo Securities Exchange Limited as a company, right? 1987, they established a law for this. What is that law? Securities Act number 26th of 1987. This is the law we apply for the security markets, right? In 1990, this Colombo Securities Exchange renamed as Colombo Stock Exchange. This is the history, right? In 1991, this Securities Council, who established the law, this Securities Council renamed as Securities and Exchange Commission. Nowadays, we are talking about SEC and CSC. What is the previous name of this SEC then? Security Council. What is the previous name of this Securities Exchange? Colombo Security Exchange. They have renamed as Colombo Stock Exchange. Clear? So these are the history. Don't need to remember or don't need to memorize all these years, but just go through. But main thing is you need to remember these years. These are the major years, no? Why? That is the year we no. We registered the company, right? And 1987 is the year we established the act, right? This is the currently prevailing act for the securities, right? All the Columbus Stock Exchange, stock brokers, all the companies should adhere this law, this act. Clear? So those two are very much important. Then 1991, we established the CDS, Central Depository System, which enable the investors to trade their securities through electronic form. Clear? So this CDS facilitate the electronic form of trading. Until 1991, we made all the share exchange transactions through the form of paper. Clear? So nowadays, even today, if you want to trade, you need to open an account in CDS. CDS account should be there, right? So introduced takeovers and mergers in 1995. 1996, over-the-counter board for non-listed companies, right? 1996 is the year when you issued the debentures for the first time in Sri Lanka, all right? Automated trading systems also there, and price indexes also introduced, right? Don't get confused or don't be, right? Don't take this as a difficult thing. Just go through those things. The important thing is about CDS and very good law and the establishment of CSC, Columbus Securities Exchange. Now, how we called it? Columbus Stock Exchange. Right? There are so many things. Just go through. Okay? Right. The role of a stock exchange. What is the role of this Columbus Stock Exchange? Providing trading facilities. That is the main role, no? What is the meaning of providing trading facilities? You should facilitate the transfer of funds between the buyer and seller, right? Platform for companies to raise capital and investment speculation and hedging opportunities. Don't think that much on these terms, right? We will learn in next year about these things, hedging and all. Mechanism for price discovery, share price determined through this Columbus Stock Exchange. And information dissemination, you can obtain information through CSC, right? All the listed companies, they should publish their annual report where? In where? The Columbus Stock Exchange website. If you search Columbus Stock Exchange website, right? From there you can download the annual reports of these listed companies. So it's a place of information distributing. Platform for implementing privatization programs as well, right? So those are the roles of stock exchange. Next, stock brokering firms, financial intermediaries. Can you remember? Right. At present, how many stockbrokers are there? 19 brokering companies are there. 29, sorry, 29. Right? Those are private limited companies and also the members of the Columbus Stock Exchange and also should get the license under the Securities Exchange Commission. And regulated by CSE and SEC, Columbus Stock Exchange and Securities Exchange Commission. You should comply with those laws and regulations of this Columbus Stock Exchange and Securities Exchange Commission. Right? And advise and assist investors, these brokers, they advise where to purchase, when to purchase, how to purchase, such kind of thing. Provide research and forecasts and information. There are some researchers for forecast the share price. In 10 days, what will happen for this share? Likewise, they forecast the price and they advise whom? Investors about that. So these are the currently available stock brokering firms. There are 29, but I just have included only 5 or 8, right? If you search stock brokering firms in Google, you can get all the names. It will direct to CSE website. From there you can identify the stockbrokers. So equity stockbrokers, Alma Securities, Embion, Asia Securities, Asha, John Keels, what else? SoftLogic and HNB. These are the most famous stockbrokers currently, right? So try to remember 3 or 5 stockbrokers. It will be needed for your examination as well. Clear? Right. Central depository system. Before doing that, shall we do some questions? Okay. Question number 1. Define the term financial market and financial system. Continuously, right? Continuously. In order to, in order to explain the financial system, use a diagram. Yes. A diagram. Diagram. Question number 2. Explain all the types of financial markets. And provide 2 examples for each. That's it. Do those questions. Finish? No. Still writing. You know the answers. Forgot. Oh. Then shall we discuss the answers? What's your first question?
As order to explain the financial system used to arrive.
Explain the terms financial market and financial systems. Right. In order to explain the financial system, use diagram. Right. Let's start with the financial market. What is financial market?
They have there's and bros interact each other.
Financial market is the marketplace where securities are bought and sold, and also allocating scarce funds from savers to borrowers. That is the definition for financial market. If you need to add some points to the answer, you can add. You got the correct answer? No. Then write the correct answer. Financial market is the marketplace where securities are bought and sold. Is a marketplace where securities are bought and sold. Also allows also allows to allocate scarce funds from savers to borrowers. Savers to borrowers. Then what is financial system? Yes. Definition of financial system.
Institute which facilitates buyers and sellers.
Should be like this, right? Check your answers. Financial system is a complex network. Can you remember that term? Financial system is a complex network which facilitates transferring funds between savers and borrowers. Clear? And also you asked to draw the diagram. Can you remember the diagram? On the right hand side, you have the lenders like this. Right? No, you can't go. This diagram. This one. You need to draw this one. If you ask like this, just draw this. Lenders are there, borrowers there, financial intermediaries, and financial market. If trading happens through financial intermediaries, what is that?
Yeah.
Indirect finance. What's the other one?
Direct finance, financial market.
Direct finance. Very good. You should draw this one. Eh? Or else you can ask like this as well. Please explain the flow of funds through the financial system with the help of diagram. That can be also asked. In our third week, we will have the first test. Okay, this is the first one, second, and in the third week. Clear? Right. Yeah, it kind of exam. Like some MCQs will be there, one word answers will be there, likewise. You will get around 10 questions. Not an essay type question, one word answers or MCQs. Clear? Most probably for 15 minutes.
It's added to the final exam marks.
Yes, it also will be added to your final exam marks. Eh? I told you, the assessment methods. There are two tests, one quiz, one assignment, and final exam. For two tests, you will get 10 marks per each, together 20 marks. For the assignment, 20. For the quiz, again 10. Final exam, 50. Clear? Right.
So, the assignment, will you give a topic?
Yes. For the assignment, I'll inform you. The topic can hold. Okay, finish. Shall we discuss the second one? What's the second question?
When more types of financial markets, provide two examples for each.
Explain all the types of financial markets and provide two examples for each. Right. Tell me the answer, please.
When issue securities which have a maturity period of less than 1 year.
Is that correct? Money market, can you remember? What is money market? It is a place where short-term securities are traded. Right? Those
Examples, treasuries or
two examples also you should provide, no? What are the securities we trade in money market? Treasury bills. Bonds? No, no.
yes.
Treasury bills, commercial papers, and certificate of deposits. Right? What is the other market then? Capital market. What is capital market? More than 12 months or 1 year, right? Which means the marketplace where long-term securities are traded. Sorry? Treasury bonds, debentures. Yes, clear. Right. There are another two types as well, no? Primary market and secondary market. What is primary market?
Issuing of shares for the first time, after being registered, new shares which has a connection with company.
Very good. What is primary market?
Why?
Primary market.
What is primary demand of yes, yes.
Which means the initial issue, new issue of securities takes place in primary markets. Examples, initial public offerings. Can you remember what is initial public offering?
First, issuing shares for the first time after being registered.
Very good. After being incorporated, a company and being registered in CSC, you need to issue new shares. No, those new shares called as initial public offering. Those things we issue where? In primary market. What is the next market? What is secondary market?
Trading of shares.
Very good. That should be there.
Trading of shares which is previously issued, which doesn't have a connection to a company.
Yes, which means trading the previously issued securities to buy and sell. Between buy and sell. Very good. Example, CSE is a kind of market.
Buying a share from a person.
Right. You can say buying a share from CSC likewise. Right? Clear. Not a person. Is it clear? Right. That's it, right? Those are the two questions. Okay.
The ownership is without going to CC to buy.
Sorry?
The ownership of the security can be changed without going for CSC to buy.
We don't go for CSC, no, because you do through the CDS, no? The CDS is a company of CSC. So it will be updated. Right. So I think now you have understand your role. What is your role? You need to do self-study, much more studies.
Then lecture.
Yes. Clear? Then only you can answer the questions. Don't worry, I won't go out of these things for your exam questions. But if you want to write clearly in proper manner, you need the understanding. For that, you need to do self-study. Self-study means not only reading this thing, you need to search, right? Okay, let's move to the next thing. What is that? Central depository system. Earlier also I have explained this thing. Just tell me your understanding. Central depository system. In which year they have established this thing?
In early 90s.
In early 90s. Acceptable, reasonable, which means in 1991 they have established this central depository system, right? So if you don't remember the exact year, then you can write like that also in 90s, in early 90s, not early 90s, right? Oh, very good, right? Okay. So it is a subsidiary of Columbus Stock Exchange, right? Central Depository System Private Limited. We simply call it as how? CDS. This CDS is a fully owned subsidiary of Columbus Stock Exchange that operate as the digital backbone for Sri Lankan stock market. Can you remember I told you before 1991 all the tradings happened through papers in the form of paper. But after the establishment of this central depository system, it has changed to the electronic form. You can do the trading through online. Yeah. So it acts as a central clearing house and depository for securities. Clearing house means when the buying and selling happens, they transfer all the funds and shares electronically, right? Depository for securities means they hold the securities on behalf of the companies. It can be a share, it can be what else? Debenture, bonds. Likewise, they hold those things on behalf of the owners and they facilitate the trading. Record all share ownership, transaction histories, who initially purchased that share, then who purchased that share from that initial shareholder. Those things will be recorded in CDS and corporate entitlements electronically. All the things happen electronically. Clear? If you are an investor looking to trade in Sri Lanka or Sri Lankan listed companies, you should know how this central depository system CDS operates. Because initially you need to open an account in CDS. Otherwise, you can't make the trade. Clear? Let's say you can go for BOC nearby here. Nearby clock tower, there is a BOC, no? In their basement, right? Ground floor, they have this kind of thing. They are kind of a stockbroker. If you negotiate with them, they will facilitate you to create the account and all. They will teach you how to do this thing. If you want, you can say, I'm a finance student. I just need to understand how these things happens. You can negotiate with them, right? Then they will facilitate it. If you want to study, you can do likewise. You can start from 5,000 or 10,000 like this for small deposits. Clear? If you wish, you can do. Then next one is key functions of the central depository system. What are they? One is securities depository, clearing and settlement. Third one is registrar services. What are the functions? Security repository, clearing and settlement, and registrar services. So what is this securities repositories? It means it holds listed and unlisted securities, right? In electronic form. That should be there. The main purpose of the CDS is to convert entire traditional system into electronic form. That's it, right? On behalf of investor. So if you're holding everything in electronic form, you don't need to use what? Physical papers, right? Second one is clearing and settlement. It sits between trading and post-trading, ensuring that securities and funds are successfully transferred after a trade, right? So there should be an assurance now. If you are doing something electronically, if you are making significant amount of transaction through electronic, there should be a security as well as the assurance. It is provided by this CDS, clearing and settlement. This function enables you to ensure that the transfers or the trading happen properly and securely. Next, registrar of service, it acts as the official shareholder database manager, handling shareholder inquiries. If you have any inquiries, you can put a chat, right? And the replacement of lost certificates for companies. If they lost their certificates, share certificates and all, they will replace. They will provide a new one. Clear? These are the function of CDS. What are they? Security depository. What is the meaning of securities depository? Holding the securities on behalf of the company in electronic form. What is the next thing? Clearing and settlement. What is that? Which means it ensures the successful trading, right? Registrar of services mean act as a official shareholder management database, database manager, right? So those are the things about central depository system. Next thing is Securities and Exchange Commission of Sri Lanka. What is the previous name of this? Securities Council. Can you remember? Securities Council, they have renamed as Securities and Exchange Commission. So established in 1987 under the Securities Council Act, which is amended in 1991 by the Act number 26 of 1991. Can you remember Securities Exchange Commission Act? Right. The objectives of this commission, Securities and Exchange Commission, what are they? Creation and maintenance of market in which securities can be issued and traded in an orderly and fair manner. All the stockbrokers and stock markets, right? They should follow the rules and regulation of this Securities Commission, right? So main objective of this Security Exchange Commission is to maintain and create the market where securities issued and traded in orderly, fair manner, right? What is the second one? Protection of the interest of investors. Protecting the shareholder interests, right? And operation of the compensation fund, right? Before going to that, how you can say protect the interest of shareholders?
So, theft. So, theft.
Without theft, no. So keep in mind, Yes, that also acceptable. But the main thing is, as per the Security Exchange Commission Act, if you want to list, right, if you want to trade your shares publicly, you have to fulfill some criterias. There are some criterias. There are types of boards. Can you remember the reserve boards and secondary or blah blah boards, main boards? Those are there, no? Can you remember those things we learn in A levels? So if you want to apply for such kind of boards, right, for the listing purpose, you should provide like 3 years profits. Right, consecutively you should have 3 year profit. You should display that profit when you're going to list your company. Likewise, there are some requirements.
Capitals.
Yes, capital structure of the company, what is the percentage of equity, shareholding, and all.
Whether it's needed.
Yes, those things are the requirements, criteria of the SEC. So, why they ask require such kind of criteria to me to do this, protect the investors, right? An operation of the compensation fund to protect the investors from financial losses arising from failure of licensed stockbrokers and dealers. If anything happened through the licensed brokers and dealers, right, you need to compensate the loss to the investors, right? It is also an objective of Security Exchange Commission. And regulation of the securities market and ensuring that professional standards are maintained, right? So this is also, these are the objectives of what? Securities Exchange Commission. So I think that's it with this chapter. I will okay with these both chapters, Introduction to Finance and Financial Markets and Financial Systems. Any doubts? No. Are you all okay with that? Right. Then we can wind up the session and meet next week. So keep in mind, in third week, we have what? Test. Right. I'll inform you the chapters as well. So don't worry. Till give you 10 marks for your final exam. Okay? So study and come. Okay then. See you. You have another one. Hamas has joined. Hamas, how are you? Hamas, am I audible?
Yes, sir.
Hope you remember me, right?